course, here's an article that is definitely worth reading, commenting on, from silverdoctors.com and posted by the doc himself. He says, the title of this anyways is JP Morgan to send silver soaring as physical stockpiling completed ? When JP Morgan decides it has enough silver, as I believe it is close to now, the price will soar if it does nothing and refrains from adding new shorts on the COMEX. The best part about this amazing story is that it offers the investment opportunity of a lifetime. All one has to do is what JP Morgan has done. Buy as much silver as one is capable of buying, and then wait for JP Morgan to help itself. From Ted Butler, Butler Research. After studying the silver market closely for more than 3 decades, I find it nearly unbelievable that its single most important price factor is widely unknown. Admittedly, the vast majority of the investment world has little interest in silver, and that's unlikely to change anytime soon. I don't know about that part. I think it's very likely to change. As more countries go bankrupt, more citizens lose their wealth, they're going to want to put it somewhere. And aside from Bitcoin, which, by the way, where's my phone? My phone's not here. Let me look it up online. Bitcoin has now been well into the 500s now. Bitcoin price, USD, $539 as of this second. You know what's sickening? A little bit. When Bitcoin came out, it was like pennies. And then it hit $2 and whoa, $2. It's digital, not even currency. It is a medium of exchange to some extent, but it doesn't fit all the criteria of money, but it kind of does. It's digital. You can never pull it out or print it out or do anything with it, right? Like you just transfer it online. Right, so this thing is scary. And then it went to over 1,000, 1,100, somewhere around there, dollars. And I remember reading the stories at the time. I even talked about in the videos that I was doing at the time. Someone had 750 Bitcoin on an old hard drive they tossed away threw in the trash, which is now sitting in a garbage dump somewhere. And this was in Britain or somewhere in the EU or UK. Can you imagine as the price hits $1,000? Even $539 today, but $1,000 because it did go over 1,000. I had 750 Bitcoin. I had $750,000, and it's sitting in the bottom of a trash pile somewhere. And even if I could find it, it would be destroyed because it's on the hard drive. And a hard drive sitting under the earth, rotting. Not a good chance of the data being there. So your little wallet ID is gone forever. There's nothing you can do about it. Sorry about your luck. Wow. And hold on. Speaking of China, people worried about their savings getting destroyed by the government. 2 days ago from Bitcoin Magazine. Never been to this site in my life, but it came up right away in my Google search. Bitcoin price soars as Chinese investors look for safe haven from devaluation and capital controls. And what else are people going to use? The age-old, thousands of years old history books say gold and silver. So I'm not even going to read this story, but that's the headline. It's right there. So to get back to my original story about JP Morgan and when they're ready for the price to go up, let's see what Mr. Butler has to say about this. So admittedly, the vast majority of the investment world has little interest in silver, and that's unlikely to change anytime soon. Again, I think it is going to be changing soon. But underappreciation has its merits in the investment world. After all, silver does have a history of climbing in price higher and faster than just about any other asset, and a multitude of factors now point to another massive price move ahead, higher price move ahead. The factors favoring a big move higher revolve around the incredibly small amount of physical silver available for investment as a result of most of the silver produced over the centuries having been used up in industrial applications. That, in combination with the fact that more investment buying power exists today than ever in the history, brings to mind the words of the famous silver speculator Bunker Hunt, the Hunt brothers. Silver is an accident waiting to happen, he said. Granted, silver also has a history of plunging more than other commodities, but since prices have already declined by 70% from the peak 5 years ago, the next big move will undoubtedly be up. And I'm here to tell you, no, it's not going to be, well, man, in the 1980s, 1980 it hit that high price, 80, 90, 2000, 2010, that's 30, man, it's 31 years. Ain't going to be no big, long wait. Ain't no way. Not this time around. Because they got a whole worldwide collapse to do with economics, new world order, new currency, massive debt problems, implosions, derivative nightmares. We ain't waiting that kind of time frame. It's not going to happen. Still, even among those who follow silver closely, remarkably little is mentioned about the one factor that just about guarantees much higher silver prices ahead. And that factor is that the U.S.'s biggest bank, and most important bank, depending on who you ask, J.P. Morgan Chase, has accumulated the largest privately owned stockpile of physical silver in the world over the past 5 years, and that's 500 million ounces. Only the U.S. government owned more silver than J.P. Morgan, but that was nearly a century ago and came when silver was used in common coinage. The U.S. government once owned several billion ounces of silver, but today holds no silver, having completely eliminated its holdings. Well, at least we got Fort Knox full of gold. When's the last time that place was audited? And did you know that there were several audits or previous audits that had to have some kind of revision in the 80s, and they were lost and we couldn't find them, and that was the end of that story. What do you think about that? You think we still got the gold there? Not a chance in hell. We may have other people's gold there until they request it back, and then we tell them what we told Germany. We'll give it to you in 7 years. It's yours. It's here. We got it, but we'll give it to you in 7 years. Have a nice day. Further, the U.S. government never held silver with the intent of seeking a profit. In contrast, the only reason J.P. Morgan has acquired 500 million ounces of silver is for the express purpose of making as much of a profit as possible. By simple logic, J.P. Morgan will make the largest possible profit on its silver holdings only if the price of silver climbs to the highest levels possible. Simple reasoning also dictates that those holding silver, along with J.P. Morgan, will profit immensely when the bank does what it can to ensure the highest possible price for silver. I'll get into what J.P. Morgan must do to ensure the highest possible price for silver in a moment, but first let me establish that the bank has acquired 500 million ounces of metal. Silver metal, that is. Most people think of banks as being involved in mortgages and checking accounts and are surprised at first at the thought that J.P. Morgan even deals in commodities like silver. But the truth is that for many years, J.P. Morgan has been the largest U.S. bank dealing in over-the-counter commodity derivatives contracts in gold and silver. Even though J.P. Morgan always dealt big in commodities, its path to accumulating 500 million ounces of actual silver took a very specific and traceable route. In addition to being the largest dealer in OTC precious metals derivatives contracts, which again is over-the-counter derivatives, J.P. Morgan was suddenly thrust into the role of being the largest dealer in gold and silver on the COMEX, as a result of being asked by the U.S. Treasury and the Federal Reserve to take over the failing investment banking firm Bear Stearns in March 2008. Few knew at that time that Bear Stearns was the largest short seller in COMEX gold and silver, and its takeover by J.P. Morgan resulted in J.P. Morgan being thrust into the role of it being the biggest short seller. While it would appear that J.P. Morgan came to acquire Bear Stearns by government request, Data from a different government agency, the CFTC, clearly indicate that JP Morgan came to dominate and manipulate silver pricing by means of maintaining and adjusting the largest concentrated short position in COMEX silver futures. And for the record, I complained to the regulators that what JP Morgan was doing was manipulative to silver prices and succeeded in generating a CFTC investigation into the matter. Still, the manipulation continued, as we all know. As a result of being able to sell short virtually unlimited quantities of COMEX silver futures contracts as prices rose and then buying back those contracts as it then caused prices to fall, JP Morgan made many hundreds of millions of dollars in the years immediately following its takeover of Bear Stearns in early 2008. But because the continued manipulation resulted in silver being priced too low for too long, by late 2010, signs of a physical shortage began to appear. In accordance with the immutable law of supply and demand, and silver prices surged to nearly $50 an ounce by April 2011, from as low as $9 an ounce in late 2008. And it was about 9 something. It was above 950, by the way. I was able to capture that at $10, and I bought some Silver Eagles. I mentioned this a few times. My buddy Frank and I at work, I ran to his desk. They slammed it. It's freaking $10. Called around, can't get any. Called around, couldn't get any. Boom. Monex had some. Loaded the boat. How many do you want? How many? Okay, put an order together. I'm wiring the money right now. It's coming. That felt great. Now, where was I? So again, $50 by April 2011, from as low as $9 in change in 2008. This caught JP Morgan flat-footed in holding COMEX short positions, as necessitated it teaming up with the CME Group, owner of the COMEX, to rig the steepest sell-off in modern commodity history, which pulled JP Morgan short bacon from the fire. Having looked into the abyss with its big short position as silver soared into the April 2011 price highs, it suddenly dawned on JP Morgan how little actual silver existed in the world, and at that time it decided the right side to be on in silver was the long side, not the short side. I fully admit to considering JP Morgan, at least as far as its dealings in silver are concerned, to being a criminal enterprise, but I also consider them to be the smartest crooks around. My definition of smart would include learning from one's mistakes, and being on the wrong side in the run-up in silver prices in 2011 is what convinced JP Morgan to buy as much silver as it could. But deciding to buy as much silver as it could and actually buying the metal are two different things, even if you happen to be JP Morgan with virtually unlimited buying power and market capability unmatched. One doesn't just blink one's eyes and place a market order to buy 500 million ounces of silver and call it a day. Takes time, patience, and cunning, particularly considered how little available investment silver exists in the world. No matter how rich or powerful JP Morgan may be, buying 500 million physical ounces of silver, given the realities of actual available supply, would take years, as it has turned out to be the case. JP Morgan knew and knows that the amount of real-world silver available for sale is limited by a few indisputable facts. Namely, there isn't much to begin with. Say 1.3 billion ounces in the form of 1,000-ounce bars in the whole world, and of that amount, only a small percentage is ever available for sale at current prices, no more than a few percent. Compounding the small amount of truly available supply from existing holders is the bedrock certainty that most of the silver newly mined and produced is spoken for and consumed by a variety of industrial and other fabrication demands. Investment demand must compete with those other demands, a circumstance highly unique to silver. For the past few years, less than 100 million silver ounces were available annually for investment after other silver demands were met. There has been no large amount of silver sold by those holding it over the past 5 years. But also there has been no big buying by these or other investors. Call it a wash. In essence, because those in the investment world were neither buying nor selling physical silver over the past 5 years, JP Morgan could only buy the leftover silver, the amount of newly produced silver not consumed in other fabrication demands. It's taken 5 years for JP Morgan to acquire 500 million ounces for good reason. That was all it could buy without driving prices higher. JP Morgan has used a variety of methods in accumulating its massive silver hoard, as I have previously detailed. As the leading dealer and largest warehouse on the COMEX, as well as the official custodian and leading authorized participant of the world's largest silver ETF, paper silver, SLV, JP Morgan was in a privileged and special position to have acquired, effectively, all the newly available silver in the world for the past 5 years. Despite a compelling desire to shield its silver accumulation from public scrutiny, some important visible clues have emerged pointing to JP Morgan's actions since 2011 April, when the run-up was $50. Among them are the opening of the JP Morgan COMEX silver warehouse in 2011, as well as the commencement of an unprecedented physical turnover of only silver in the COMEX inventories, which continues to this day. Due to the large weekly churn, JP Morgan was able to skim off hundreds of millions of silver ounces, which were brought into its COMEX warehouse and other non-public warehouses. From 0 ounces 5 years ago, the JP Morgan COMEX silver warehouse has grown to the largest COMEX warehouse, holding nearly half, 70 million ounces, of the total COMEX inventories. In 2012, JP Morgan cleared out and transferred 100 million ounces it held on behalf of holders in SLV out of its London warehouse to make room for silver to be held in its own name. JP Morgan started to take delivery on futures contracts, despite being a big paper short, and over the past year or so has taken 45 million ounces in total deliveries, taking close to or the full amount allowed monthly. It's not far from the truth to say that JP Morgan has been nearly the exclusive acceptor of COMEX silver deliveries. Perhaps the cleverest method JP Morgan has employed to acquire physical silver has been as the leading purchaser of newly produced silver eagles from the U.S. Mint and silver maple leafs from the Royal Canadian Mint over the past 5 years. All told, JP Morgan has acquired over 100 million silver eagles and 50 million silver maple leafs during this time, and maybe a lot more. As I have also previously explained, I believe JP Morgan has melted down these coins into 1,000-ounce bars to best prepare for sale eventually. The most remarkable aspect of JP Morgan's massive physical silver accumulation is that it was able to do so on steadily declining prices because, as you know, silver prices have declined from near the $50 mark over the past 5 years. How the heck did JP Morgan pull off buying 500 million ounces of silver on falling, not rising prices? Because the entire time JP Morgan was buying silver, it was still managing the price lower on the COMEX by maintaining and managing its manipulative paper short position. This is truly the perfect crime, buying a corner on the physical silver market cheaply by maintaining a short corner on the paper COMEX market, which again is what sets the price. And I can't imagine who would be more capable of pulling this off than JP Morgan, the best connected and most powerful U.S. bank. Having accumulated the largest hoard of physical silver in history, and being in a position to reap the biggest profit in history, should silver prices soar, what can JP Morgan do to bring that about? More amazing than anything else, the one thing JP Morgan can do to cash in like no one else has ever done in silver is, well, nothing. That's not a blueprint. All JP Morgan has to do to guarantee that silver prices will soar to the heavens and beyond is nothing. Specifically, not sell any additional contracts of COMEX silver short on the next big rally. You see, it has been JP Morgan who has put a cap on all silver rallies over the past 5 years in order to contain prices so that it could add to its massive physical holdings at cheap prices. The corollary to that question is that when JP Morgan decides it has had enough silver, as I believe it is close to now, the price will soar if it does nothing and refrains from adding new shorts to the COMEX. The best part about this amazing story, in addition to being almost universally unknown and destined to be discovered, is that it offers the investment opportunity of a lifetime. All one has to do is what JP Morgan has done. Buy as much silver as one is capable of buying and then wait for JP Morgan to help itself. And I will end this video, this is a long one, but I will end this by reminding you that the COMEX CME group that runs it added those rules in, I believe, November 2014 that said If silver prices rise 4 times in a day, $3 moves each, circuit breakers are triggered. And you can't trade until they are, flip back on, so to speak. Then you can trade again. If the price moves $3 again within a certain window of time, circuit breakers are triggered. It can happen 4 times in a day. The same rule was applied to gold, except it is allowed to move $100 in that same window of time, and then circuit breakers are triggered. So again, I have to ask, there's only 2 choices here. Would the club put this in place when they've never had this in place ever before, and they've been able to whack the price of silver anytime they felt like it? So did they add that to help them whack the price? Doesn't make sense because they've already whacked the price. They don't need that. That would be like looking out for you, the small guy. Oh, we don't want you to take a beating when we smash the price today, so we're going to let these circuit breakers trigger for your sake. Absolutely not. So it can't be that. What's the other choice? They know the prices are going to rise exponentially, and they got to put a cap on it. They're not going to be able to flood the market with paper shorts when whatever comes that they're expecting, because the price rise is going to be gargantuan. So what can they do? Oh, automatic circuit breakers triggered. Everyone calm down. Trades, settle down. Okay, go ahead and trade again. Oh, crazy. Oh, circuit breakers triggered again. That's how they're going to manipulate it. Or basically not let it rise too fast. They don't put in rules like this to help the little guy. They crush the little guys. They crush you like a cockroach. That's what they do. And then they also buy when things are very underpriced. They don't buy at a fair price. They don't buy at a decent price. They destroy something and then buy it up. So to see where silver was and where it's at today, one could argue they've destroyed the price, and JP Morgan has been buying it up all these years, last few years. It's been low for a while now, right? And is getting ready to ride that horse to the top when the price goes crazy. All the lawsuits that will fly, all the things that are going to happen, JP Morgan will have a war chest of money by selling its silver when the price goes crazy. They unload in the market too. They're filthy rich, richer than they already are. And they can put out any of these little fires, lawsuit, fraud, cooking the book. None of it will matter. They will have so much money to play with. So, keep stacking. That's all I can tell you. Keep stacking.